Hedge Fund Market Wizards? How Winning Traders Win, by Jack D. Schwager. Forward by E.D. Sekota. Wall Street, skyscrapers towering over the streets, traders rushing across the New York Stock Exchange floor, stock tickers flashing green and red. Imagine this. You're sitting in a high-rise office, 50 stories above the streets of Manhattan. The phone rings. A market is crashing. Your position is on the line. In the next 5 minutes, you have to make a decision. Cut your losses or double down. One wrong move, and millions disappear. One right move, and you're a legend. This is not a game. This is the world of hedge funds, where fortunes are built and destroyed in the blink of an eye. And only the smartest, the boldest, and the most disciplined survive. But let me ask you something. What separates the winners from the losers? Is it intelligence? Some of these traders didn't even study finance. Is it luck? If that were true, they wouldn't be consistently beating the markets. Is it having insider information? The truth is, that might make a trader lucky once, but it won't make them great. So what's the secret? Jack D. Schwager, a seasoned financial journalist, wanted to find out. He went behind the scenes, stepping into the private offices of the world's most successful hedge fund managers, men and women who have made billions in markets others fear. He sat across from them, listened to their stories, analyzed their thought processes, and uncovered what truly makes them market wizards. And today we're about to dive deep into his book, Hedge Fund Market Wizards. This isn't just a story about finance. It's a story about how to think differently, how to master risk, and how to see opportunities where others see chaos. So if you're ready to learn the untold secrets of Wall Street's most brilliant minds, welcome to the world of market wizards. Segment 1. The mystery of the market wizards. Hedge funds, mysterious, elite, ruthless. To the outside world, they seem like high-stakes casinos, places where billionaires make reckless bets, riding waves of luck and market manipulation. But that's a myth. The truth? The greatest hedge fund traders don't bet, they calculate. They don't get lucky. They create their own odds. And they don't just follow trends, they define them. Jack Schwager spent years uncovering their secrets, sitting across from some of the most brilliant and elusive minds in finance, people who play the markets like a grandmaster plays chess. And what he found might surprise you. The best hedge fund traders aren't the loudest voices on CNBC. They're not the ones bragging about their wins at cocktail parties. They operate in silence, pulling the strings behind trillion-dollar markets, always staying 2 steps ahead. Take Ray Dalio, for example, the mastermind behind Bridgewater Associates, one of the largest hedge funds in the world. Dalio doesn't trade based on emotions. He doesn't get caught up in media hype or panic when the market crashes. Instead, he follows a strict, principle-based system, a playbook for navigating any market, no matter how unpredictable. His strategy? Radical transparency and emotional decision-making, and an obsession with understanding economic patterns before they happen. Now, imagine someone even more calculated. Enter Edward Thorp, not a Wall Street trader by profession. He was a professor, a mathematician, a scientist. Thorp didn't just study probability, he mastered it. First, he cracked blackjack, creating the first ever card-counting strategy and forcing casinos to rewrite their rules. Then, he turned his attention to an even bigger game, the stock market. Using math, Thorp found inefficiencies in financial markets that no one else could see. He created trading models so precise that he built one of the most successful hedge funds in history, never having a losing year. And then, there's Colm O'Shea, a trader who proves that being right isn't enough. You need to be right at the right time. O'Shea's strategy? Adapt fast or die. In his world, being stubborn is a death sentence. If the data shifts, he shifts. If the market changes direction, he doesn't hesitate, he evolves. He doesn't trade with ego, he trades with survival instinct. 3 traders. 3 completely different approaches, One common trait: they never stop learning. Because in the world of hedge funds, the second you think you've figured it all out, the market humbles you. Segment 2: the secrets of the best traders. So, what makes these traders different? Is it their intelligence, their ability to predict the future, their access to secret information? No. The truth is, the best traders don't predict the market, they prepare for it. They don't focus on making money fast, they focus on not losing it. Jack Schwager spent years studying the world's greatest traders, and he discovered that they all follow 5 powerful principles that separate the winners from the losers. Are you ready to hear them? Lesson 1: risk management is everything. If you think trading is about making money, you're already thinking like an amateur. The best traders? They focus on protecting money first, because in this game, if you don't manage risk, you won't be around long enough to win. Consider Ray Dalio. His hedge fund survived and thrived for decades, not because he made crazy bets, but because he obsessed over risk management. He built an entire system to minimize downside exposure so that even when things went wrong, and they always do, he would never lose everything. Or take Colm O'Shea, a global macro trader who operates like a battlefield general. He expects to be wrong half the time, but because he cuts his losses early and never lets a bad trade spiral out of control, his winners far outweigh his losers. The bottom line? The best traders never bet the house, they always have an escape plan. Lesson 2: find your edge. There's no single way to make money in the markets. Some traders live by technical analysis, reading charts and patterns like a secret language. Others, like Michael Platt, mix fundamentals with market psychology, always staying one step ahead of the herd. But what do they all have in common? They know their edge, and they stick to it. Let's talk about Edward Thorp, the man who beat casinos at blackjack and then turned his mathematical genius to Wall Street. Thorp didn't chase hot stock tips. He didn't follow the crowd. He developed an edge, probability theory, and applied it relentlessly to the markets, turning his hedge fund into one of the most consistently profitable in history. The lesson here? Find what works for you, perfect it, and never trade outside your lane. Lesson 3: adapt or die. What's the fastest way to go broke in trading? Clinging to a belief when the market proves you wrong. Markets are constantly changing. What worked yesterday might destroy you tomorrow. Just ask Steve Clark, a hedge fund trader who made his fortune by being flexible. Unlike many traders who get emotionally attached to their strategies, Clark has a simple rule: if the market is telling you that you're wrong, accept it and move on. He once shorted a stock that he was certain was overvalued. But when the price kept climbing, instead of stubbornly holding onto his position, he flipped the trade, going long instead. The result? A huge profit, because he adapted before it was too late. The best traders aren't always right, but they always adjust. Lesson 4: the best trades are often the hardest to take. Think back to 2008. The housing market was collapsing. Banks were failing. The entire world was in full-blown panic mode. People were pulling their money out of stocks, running for the exits. But while the world was screaming sell, a small group of traders saw something different. Guys like Jamie Mai and Michael Burry. They didn't just see the crash coming, they bet on it. When everyone else was in fear mode, they held their ground. And when the market collapsed, they made billions. This is one of the hardest lessons in trading. The right trade often feels wrong at first. If it were easy, everyone would do it. But the best traders? They lean into discomfort. They embrace uncertainty. And when the world panics, they stay calm. Lesson 5: psychology is the real game. Most people think trading is about numbers, data, and algorithms. But the truth is, trading is 80% psychology, 20% strategy. Because at the end of the day, the biggest enemy in the markets isn't the competition, it's yourself. Greed, fear, overconfidence, hesitation. All of these emotions can destroy a trader faster than a market crash. That's why the best hedge fund managers train their minds like athletes. Take Paul Tudor Jones, one of the greatest traders of all time. He once said, "The most important rule of trading is to play great defense, not great offense." What does that mean? It means he doesn't let his emotions dictate his trades. He knows when to walk away. He knows when to cut losses. He stays mentally sharp because he understands that the moment he loses control, the market wins. The best traders don't just manage risk in their portfolios. They manage risk in their minds. And that's the real secret to winning in the markets. Now you know the 5 most powerful lessons from Hedge Fund Market Wizards. But here's the real question. Which one will you apply first? Segment 3. The mindset of a market wizard. At the end of the day, Hedge Fund Market Wizards isn't just a book about hedge funds. It's about something much bigger. It's about how great minds think, adapt, and execute in trading, in business, in life. Because the truth is, the principles in this book aren't just for hedge fund managers managing billions. They're for anyone who wants to excel at the highest level. They're for the entrepreneur who knows that markets change, but adaptability is king. For the investor who understands that risk management isn't just about protecting money, it's about survival. For the dreamer who realizes that chasing money is never the answer, chasing mastery is. The best traders don't just read charts. They read human nature. They don't just follow trends, they anticipate them. And most importantly, they never stop learning. Because in the markets, in life, in any high-stakes game, the second you think you figured it all out is the second the world humbles you. So, if you take one thing from Hedge Fund Market Wizards, let it be this. Find your own edge, manage your risk, and play the long game. That's how you survive, that's how you win, and that's how you become a market wizard. And if you want more deep dives into financial mastery, don't just watch, engage. Hit that like button, hit that subscribe button, and stay with us as we continue to uncover the strategies, secrets, and stories that make market wizards legends. Until next time, trade smart, stay sharp, and always keep learning.